Welcome back to the interview section of the Security Token Show. This week we have a new guest, a returning guest actually, Gabe from Dinari. How are you today?
I'm doing well. Good to see you again, Jason.
Likewise, likewise. Thanks for coming back on. You guys, it's no secret you guys are doing really well with tokenization, specifically US equities, making them accessible worldwide. But you guys are going to be adding more fuel to the fire here. You guys just raised $12.7 million Series A at VC and Blockchain Ventures, taking the lead on that. Tell us a little bit about your experience, maybe in this new crypto Web3 tokenization environment that we're in. What has your experience been like raising capital this time around?
Yeah, look, as you know, because you've been tracking us for a while, we started back in 2021, back when the words tokenized securities was like Voldemort. Like you're not supposed to utter those words at all. And so it's been like a really big slog, I think, over the last 3 years, working diligently, working on the compliance, the broker dealer, all these kinds of things to get to where we are today. And then, of course, as we got traction and as the new administration came in, things shifted rapidly. Now it seems like everyone's talking about tokenized securities. And so, suffice it to say, we went out to raise a Series A, and we were firm that we wanted to raise 10 million for our Series A. Obviously, it did not go according to plan. There were people that really were very excited about what we were doing, like Fidelity and VanEck, and these guys, and that's just such a different take and experience than what it has been for the last 3 years. So we're really excited by Hack and Blockchain. They've been a huge supporter of us. They have put a lot of trust in the founders of this company to see this vision realized.
Makes sense. Makes sense. I appreciate it. And you're right. The sentiment is definitely very different than it has been in the past around this technology, but also just even within the Web3 space, I think people are finally understanding real world assets, or at least that's the term of the year that people want to assign it. But regardless, tokenizing, securities, assets that are tangible, right, and have value. So, people are getting it. We're moving forward, and as we track a lot of it too. And so it's been nice to see that growth. I'm curious a little bit more about what's next for you guys now that you have, this, big chunk of change, if you will, to deploy. How do you plan on using it to scale your operations, Dinari's reach, et cetera?
Yeah, some of it is very aggressively boring. So we've done almost no marketing for our APIs that allows anyone to essentially become a broker dealer and offer U.S. stocks anywhere in the world. And so we thought we're going to have to do a lot of marketing and get these partners on board. Turns out it's actually been the opposite. We have so much inbound that I no longer could do it all by myself. So we had to hire a few people to help me. We brought on Anna Wroblewska, who spoke at your conference as our chief business officer. And she's been phenomenal in sort of standing up and handling the demand on our platform. And then, of course, we have to continue to add some new features on the product side of things. And so it's a little bit product and a lot on the sales and marketing side, making sure that every one of our customers are successful as they launch their own version of tokenized stock offering.
Makes sense. Absolutely. And then you guys are making it very easy, very frictionless to make it possible. It's pretty much API based is my understanding. So it makes sense, right? People want to give this in their own, branded way, but you guys obviously protect, taking care of all of the operations there. So fantastic. And we loved having Anna at Tokenize this. So for anyone watching, if you want to check out that Tokenized Stocks panel, we'll have that up shortly. Great. So we talked about how, again, these are U.S. equities, public stocks that are being tokenized, ETFs as well. You're making them available to non-U.S. investors. What is maybe the feedback you've gotten from some of those customers, and what regions do you think are showing the most demand here?
Sure. So it's been interesting because we have partners in Latin America, like Argentina, Brazil, that are doing phenomenally well. And it kind of makes sense because they're already used to transacting in stablecoin down there. And so the fact that they can use the stablecoin that they already have, now to get exposure to US stocks without ever having to go to fiat, without having to trust anybody. They can just do it directly themselves. That's shown a phenomenal amount of demand. I would say that surprisingly, UAE and Turkey and some of these places in the Middle East have been phenomenal in their response in gain access to exposure of US stocks. And then I'm really actually proud to say that we've launched into regions with partners like Facet in countries like Pakistan, where we're the first ones ever to offer US stocks to end users in any form, tokenized or otherwise, to the average customer in Pakistan. And same thing with Indonesia and a few other places in Southeast Asia. So really just this mission of bringing the exposure to the world's best assets to people who traditionally don't have access to them is being realized, and we're really excited about that.
That's really cool. And Facet, for anyone that watched the Security Token Show last week, they just got their Pakistan license, sandbox license to do tokenized gold. I'm assuming now with tokenized stocks as well with you guys. So that's fantastic. Is there a difference in approach as you kind of go to region, or is it all kind of everyone kind of just using the same approach for you guys in terms of how you're going after some of these partners?
Honestly, it's been like I said, all inbound so far in terms of partners. And so it's really been figuring out, are there new licensees that we have to get in certain regions, or do the partners that are coming in have those licensees? It's figuring out all of those things is the most complicated part. But generally speaking, we always find a solution. Obviously there are some countries we just can't go into, that's on the OFAC list and things like that. But outside of that, we really try to make it work.
Fantastic. Awesome. Well, shifting gears here, some critics might argue that tokenizing equities to blur the lines a bit between, TradFi, crypto, potentially also introducing some systemic risk. Just curious on how you would respond to that, your thoughts on that. Oh,
the world's going to be tokenized. And so eventually we're no longer going to make a distinction. I really believe that blockchain and blockchain-based companies is going to become synonymous with fintech companies in the next decade. And we're making that big transition. And whenever we make a big transition, the question is how do we transition from the traditional infrastructure to this new and better infrastructure in a way that doesn't harm customers, in a way that is as smooth as possible in its transition. And the industry is reckoning with that right now. And the truth of the matter is once exchanges like the NYSEs, like the NASDAQs of the world, can all of a sudden shift into a tokenized infrastructure, perhaps we're now looking at exchanges that can't, that's not just about exchanging public stocks, but it can be all sorts of different assets. Because as we all know, the world is tokenizing everything. And so really for the vision of Dinari and where this is all headed is that we want to be one of these exchanges that are very trusted, that are fundamentally blockchain based, so that we can be the home to all these tokenized assets, and the users will benefit because all of a sudden they will be able to move in and out of public stocks, private stocks, bonds, debt, treasuries, whatever it is, interchangeably. And this tokenization being the great equalizer and the universal protocol is an exciting future that we're building towards.
Oh man, I'm just excited and pumped, and I'm about to dive in even deeper on this because I think you just brought up some good points. But for anyone watching on the Security Token Show, I'm going to pause it here because we do have to move on to the next segment of the show. If you want to watch the rest of this interview, it'll be on STM TV official on YouTube. With that, on to the next section of the show. And Gabe, everything you just mentioned, I love it. We're talking about tokenizing private assets. The public ones we're already tokenizing now, alternatives. How do you see this impacting now the future of maybe like structured products, new ETFs, indices, et cetera? What's your take on that?
Yeah, I mean, as we just talked about, The short term, the lines are gonna start blurring, right? We're gonna have ETFs that have native on-chain assets combined with off-chain assets. We're gonna have, things like properties and things like that getting fractionalized and being tokenized. There's this blurring of the traditional with the blockchain, and the short term is like kind of weird, right? It's kind of this. It's almost like everyone, I think, generally agrees that once every car on the road is self-driving, the world's probably going to be a safer place. But the argument is like, what happens when it's like some of them are self-driving cars and some of them are human-driven cars? We're kind of in that stage of finance, right? And finance rails. You have the stable coins finally kind of flipping over, right? Because the banks are now going to have stable coins. But traditionally, finance is very fragmented. You have the banking rails, you have Swift, and all these wires and ACH, and all those are different rails. You have the stock exchange, which is its own rails with DTCC. You have private company shares, which is basically like no rails, right?
Yeah.
There's no rails, and so we live in this fragmented world, and we have this vision for kind of a universal protocol for all these assets. And there's going to be friction as we transition from one to the other. So some of the experience is going to be suboptimal. Some of the people are going to be asking, like, why do we have to tokenize X, Y, and Z when it's already readily available? All those are questions of the short term, because in the long term, every customer benefits by the world shifting over to an on-chain set of rails.
Totally. Yeah, absolutely. And it's going to take some time because it's not just the tokenizing of the asset, which I would argue is the easier part. It's the rest of it, the legacy systems, the everything in the back and middle office that corresponds with that, and bringing that on chain, which is its own beast
Right.
to tackle. So it will take some time. I think that people are optimistic. We are too, but we also have to be conscious of you're moving quadrillions of dollars worth of value on chain, and so everything and implications that goes with that. Not to mention asset class to asset class having their own implications. In the medium term, there's you guys, there's other providers that are tokenizing stocks. Do you see opportunity, or have you seen any activity on, like, for example, like arbitrage, whereas some tokenized stocks maybe are available for trading a little bit more often than, say, your typical trading hours? Just
Yeah.
curious, any thoughts there? Yeah.
So that's going to become a bigger and bigger opportunity. And we're definitely talking to some market makers now. There's definitely interest now of traditional crypto market makers opening up traditional brokerage accounts so that they can arbitrage between the two effectively, right? And I think for as long as there's inefficiency between the on-chain and the off-chain markets, that's going to continue. So that's an opportunity for whoever wants to take advantage of it.
Absolutely. Awesome. Well, I'll close it out with maybe some forward-thinking things, not that we haven't already, but where do you see DeFi maybe playing a role with tokenized public equities, and whether it's vaults or other DeFi applications?
Yeah. So at least with D shares external to the United States, once it's minted, and the minting is permissioned, and it requires KYC. But once it's minted, it is DeFi compatible in its nature, and we built it that way. The caveat is if it moves out of a wallet that's been KYC'd, you lose voting rights and you lose dividend rights, right? And that just has to do with the fact that you have to be a known entity to receive dividends and things like this. But we think customers will make that choice, right? Depending on what they want to do with that asset. And so I do believe that there is a world where DeFi plays a big role in this, whether it's, derivatives, atomic lending, borrowing, leverage trading, perps, what have you. I can see an entire ecosystem that blooms out of this.
Fantastic. Awesome. Well, I appreciate it, Gabe. Is there anything that we haven't covered yet that you want to audience should know?
It's a pleasure, as always, to see you, Jason. Thank you for having me.
Likewise. Thank you, Gabe. Appreciate you.
Take care.
And with that, everyone, make sure to check out Dinari, check out stm.co, and we'll see you next time.